Good morning, everyone. Welcome to Admiral Markets. Welcome to this webinar. This webinar is going to take a look at the currency market, or the Forex market. It's going to take a look at technical analysis and look at the various elements of technical analysis and applying that to the charts of price. All right. So before we actually start with looking at the charts, we're going to take a look at this PowerPoint to explain what the basic outlines are of this trading room here where we take a look at the charts. So disclaimer, explaining that the material here is intended or developed for a global audience. Please take into account that the info in this session therefore might not be suitable for everyone. To get the corresponding info on charting conditions and other details, take a look at admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, the risks involved in trading foreign exchange and global financial markets are considered high risk. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for informational and educational purposes only. Please take a look at this now, just briefly, but by continuing watching this webinar, you agree with the disclaimer and the content mentioned here. And we thank you for your attention. Good. So with that said, let's move over here. And basically we're taking a look at these 5 check steps and checklists. And of course that's just part of it. That's the checklist prior to entry, then after the entry. That's very important to have the trade management in play. That has to be in sync with your trading psychology because you have to make sure that you are able to execute that trading plan. Therefore, we have to find a sync between the trading psychology and our strategy and trading management. If it's not, then of course we can at first blame the psychology, but maybe the psychology and the strategies and the trade management are not in sync, so we have to make sure that those are can be supported by how we naturally look at the markets, right? If we have fear for losing profit, then maybe a trading stop loss would be easier for us to execute in our trading plan, for instance. That's very important. I talked about it in Tuesday's webinar, by finding that balance between one's psychology and one's strategy and trade management plan. So that's very important. Always try to understand why maybe a certain part of the strategy is not being implemented as it should be. Is that just a one-time off thing that was by accident, unintentional, or was it intentional, and was it regular? Does it occur regular, or was it just a one-time thing? And if it does occur regular, why? And the question to that could lead to maybe an improvement in the trading plan. With that said, take a look at Admiral Markets' social media. And now I'm going to take a look at the Forex calendar before we look at the charts. I do have a question from a new viewer that is joining us for the first time. Welcome, Yatin or Jatin. Thanks for joining us here, and you can always ask questions indeed in the chat box. Well, please do. Would love to see any questions or comments gladly. And what the risks of trading in India is something that I guess it would be best to go to Admiral Markets, that global website I mentioned, and contact an entity, select your country of residence and contact an appropriate entity. I guess that would be the best, because I wouldn't know by heart about that, about the regulations in India or and stuff like that. Okay, so I hope that will help going to that link. But in any case, I would always recommend Admiral Markets. So that would be always a wise choice in my opinion, okay? This $1 1 hour chart, looking at a bit of a bumpy ride yesterday. To me, if I looked at the 4-hour chart, it definitely had the potential, because it was breaking out of the moving averages here. And basically, I'm trying to open my drawing too. Just give me a second. All right. So basically, it was trying to break out of these moving averages, right? We had all the moving averages aligned above each other, although they were quite flat. That was probably one of the risks that were involved when the moving averages are that flat. But price did try to break above it because they were flat. Probably that's why we got that big of a deeper retracement. Didn't really expect such a deep retracement. I was thinking maybe 138.20, 138.30. But we got all the way to 108.05, I think, 138.05. That was pretty deep. But that could be because of the flat moving average if I think about it. In any case, still the same structure though as yesterday. Still breaking above, actually this is the double dip. Sometimes you have that when you break the first time above moving averages, you go one more time back to them, and then if you break above them, then that's basically had the double dip to the moving averages like this. That happens more often. We've talked about that more often. So yesterday was that double dip. Throughout the night though, we had bullish engulfing twins, so I like still the upside. Also, we have now a clear level. If we break that level, this is certainly a breakout trade here. Follow through on the euro dollar to the upside. So to me, it looks bullish. If you look at the weekly candle, we had a retrace of last week's bullish engulfing twins. This is the bullish engulfing twins here. This week, we've had a retrace of that and a bounce. I would expect follow through the next 2 days. Let's see if that happens. Maybe we'll get a failure to follow through, and this will stay an inside week candle. That's possible. For the moment, though, there's a decent chance that we can get the follow through, but a key level would be yesterday's high and this top in here. If we break that, that chance is high. Till that point, we never know. We could get, it could linger in here for longer than we want, basically. All right, but in general, small range on the euro dollar, relatively. But it is, although small, it has that bullish tendency. It had a dip down this week and it had a bounce this week. So it seems to be building a base here for upside, as we discussed yesterday. The pound dollar, of course, was a totally different story. It unfortunately didn't make any hook back. Missed my entry order by 7 pips and flew up. Yeah, that's part of life. That's part of the risk involved. So that's a shame. I didn't have a pending order here. Well, I said position trade is good. If you're looking for intraday pullbacks, we didn't have it, unfortunately, because of the news event. The unemployment rate was 6.9 for the pound, not 7.2. That's a major difference, and that spiraled the pound to the upside. If you were a position trader, you could have taken that break here. You're still in that trade, and you could even zoom into the hourly and put your stop loss below this bottom right here, I would say, to lock in some profit. So that's a good position trade or swing trade. So that was a nice one. From the intraday perspective, though, it was just a blast because of the news event, no hook back, and it was a blast and quietness throughout the day, which I expected. Personally, because of the fact that it already had moved so much in this time frame that I expected actually no more movement that day, and probably today to get the follow through. We had that already very early, earlier than normal, which to me is a bit strange in the sense that break is very early. That is something that is unusual. Let's see, when did this break? It broke 42 pips. It's relatively a lot. It broke in the second half of Asian, which makes sense because the first half hardly moves. And I think that we will not see much follow through today on the pound dollar. I think that we have divergence between these tops. I think that the break of this triangle to the upside was logical because we had such a big momentum. But with the divergence in play, the early break may be creating some kind of bullish sentiment, but it seems like it's a decent chance to retrace back to this level, I would say. Also, if you look at the hourly here, we already have this turn on the oscillator. We could see the 1 hour oscillator go back to the 0 line, which means we could see some correction, I would say, maybe back to the support. I would be cautious with the pound. There's also pretty heavy divergence on other oscillators as well. So if you're in a swing trade from here, great, lock in some profit by moving below this bottom. And maybe we'll get a retracement day and still a bounce at that level, and you'll still be in for upside continuation. If you're intraday trading, let me take a look at the Camarilla. 1 second, let me change template. Good morning, Raj. Good morning, Georg. Raj says, or Raj, right? I think. I hope I said that correctly. Says good morning to everyone as well. Pound dollar. Rai. It's difficult. You can't. Rai. Or Raj. No, I'm probably saying it incorrectly. I know I said it correct last time, but oh, now I said it good. Okay, that's good to hear. That's good. So pound, yeah, it's getting close to that H4 here. So a retrace down to the pivot in L3 could be in play. However, if you look at the moving averages, I'm not going to take any of that trade. It's high risk because moving averages are still up. So no, I only trade with the moving averages here on this, especially on the 50-minute world, because usually speaking, there's not much space when making retracement trades, unless there's a reason for a bigger retracement on a 4-hour or daily chart. But I don't see that as yet. I still think that we would see maybe one more push up on the 4-hour chart. 4-hour chart, I would expect one dip and one more push up. So I don't see that potential as yet, at least. So therefore, if that would happen, if let's say there's a big potential reversal on the 4-hour daily, then that's something different. Still would like to trade with the momentum though on the 15-minute chart. Euro dollar has the momentum up, moving averages are up, so that's good. But it has a daily high here close by. That's not so good. Therefore, we have to see how far it can push. Seemingly, it's trying to push through the R1 and the H4 long breakout, which would mean that we have a precedent. If there seems to be a chance now to get to the H5. So that's correct. It seems the euro dollar seems more bullish than the pound at the moment, which probably means that euro pound will have some chance of a retracement. Is that correct? Seems like we are rounding a bit here, although obviously momentum is down. Euro is an example where we could expect maybe some potential retracement. Talked about it yesterday, didn't get that follow through yesterday. Made a deeper dip down back to the 50/61.8 fib, got the bounce there. 61.8 fib to be exact. So let's take a look at that. 1, 2, 3, 4, fifth candle, not breaking this bottom. The chances of this momentum being over are therefore high, and at that point, indeed, we made upside ever since. So if you look at that upside on the 50-minute chart, you can see moving averages are aligned ever since here, and this was a good breakout trade right here, with the H3 short being broken and the fractal being broken, moving averages aligned. The bounce already happening here, in fact, or here. Off of that 1-hour chart at least, off of the 61.8 fib as well. And the break here is good. So that trade is going well on its way, and there could be some follow-through, maybe a scale-in. It's a risky scale-in upon the break of H4 and R1 and this top here, because there's a daily high very close by. From a bigger perspective though, so personally, I like this one the best. Maybe you took that one too this morning. The stop loss can easily be put to break even, and that trade is out of risk. And in fact, the trade could be up already. If you took that, you would be up about 1-to-1 already. So 1.5-to-1 could be already maybe worth taking some profit, but trading stops are always good. Or maybe taking profit at the top here, the daily high. In any case, if you look at it from the 4-hour perspective, we have double divergence, we have double bottom, and we know that there's a potential for this euro odd therefore to correct higher. How high? For instance, first of all, up to the 23.6 to minus 272. Then all the way up to the 38.2 fib. What kind of space is that? Let's take a look. That space basically means above this daily top means that we have this space and then potentially the bigger space with some smaller resistance here. Right, so where's the space? This is reversal trading though, right, because there's a down momentum. But we do have significant signs, as we said yesterday, for that potential reversal. So we're still looking at that potential reversal to continue, right? That's basically it. But it's not going to go in one straight rocket. It's not going to go in an arrow. It's going to have its ups and downs, as we can see. And the top, yesterday's top, the 272 target, the minus 618 target, and then eventually the bigger 4-hour fib. And fibs will, of course, have their resistance as well. That's an example of reversal trade potential that has enough space, in my opinion, to make, to try to capitalize on. It makes sense. Odd USD is struggling both ways. It's not too clear if we're going to make one more fall down to the minus 618, or are we going to break this trend line for upside continuation? I think that's basically the story of today for the odd USD. Now, if we expect odd weakness against the euro, then maybe the odd USD downside seems more likely at the moment. But I'll keep an eye on both lines, to be honest. So we'll see soon enough. All right, if we do break to the downside, we could see the fall down to the minus 618, and we could see a bigger retracement continuation on the Aussie. We look at the 15-minute chart. There could be a breakout trade here of the fractals, for instance, which will also be breaking the trend line that we have here on the chart. And we might see some pause at the S1L4 confluence and the bounce, but I would expect, looking at the bearish structure, that if we do break the trend line and L3, that it's just a bounce as a retracement for more downside down to L5. That's what I would expect now at the moment. This red, down, blue, red. If we do break below the bottom here. If we break below green, I would expect some down, up, down. Eventually, if we do get to the minus 618, which is basically a confluence of S2 and L5, roughly speaking, in that zone, I would expect to bounce again. That bounce could be an interesting swing trade potential, because the odd USD, in my opinion, still has upside potential. It's just a question of how deep the retracement could go at the moment before we do get a bounce up. Now, this level apparently wasn't strong enough because, or could, I mean, we don't know yet, could be the turning spot, but that will have to depend whether we break above this triangle or not. If we don't, then it's looking like a correction for more downside. If we do break above this trend line, then this apparently was the bouncing spot, although, as I already said earlier, the downside's maybe slight higher chance of that happening, although it really doesn't matter. We just have to keep an eye on both lines and see which one breaks. But my point is that if it does break to the downside, I wouldn't expect an ultra big move down. I would just expect an intraday move down and closing out that short somewhere in this area and having a TP in that area makes a lot of sense, because I wouldn't trail stop this particular trade, in my opinion, because I don't think that space, well, I mean, it's still possible to trail stop it, but I think an optimal play in this case would be to take profit in this green box, because of the fact that that is a high probable bouncing spot. And you know, there's even a potential to see a big bounce there. As a swing trader, I think this is an interesting bouncing spot. As an intraday trader, I think this is an interesting break to the downside spot. That means for my intraday, I need to close, and for a swing trade, I could try to hunt for a long here. So I'm closing an intraday, and simultaneously, or almost simultaneously, could potentially be looking for a similar spot for a swing trade to the upside. Eventually, if we break this trend line, we could see a bigger move up. Now, why would I still be bullish on the Aussie USD, you might be wondering. So let's take a look at the weekly chart. And to me, this is still having weekly bullish candles. So especially this first week, it's still just a retracement of last week's bullish candle. There's no hiding around it. There's no, how do you say it? There's no one who can contest that. It's just a fact. It had a bullish candle, dot, right? There's no way around it. Okay. Now one could say, yeah, but there's a bit of a smaller wick. That's true. There is a bit of a smaller wick at the top, but I don't think it's crucial. This had a smaller wick too. We did have an inside candle after that. This had a smaller wick too, still had a continuation. This had a smaller wick too, still had a continuation. The wick, in my opinion, is relatively still on the small side. It's not the best closure of that candle. Therefore, some downside this week is maybe not so surprising. To say that that is a reversal candle, that goes way too far. If anything, it still more resembles a continuation candle. So anything that stays above last week's low is just a retracement in my eyes. And therefore, if we look at this particular support level, that last week's low is at 92.56. So let's keep that in mind, okay? 92.56. So if we look at this 4-hour chart, where's 92.56 compared to the 4-hour chart? It's here, the red line. Where's the minus 618? Here. So where should we put our stop loss if we're buying the minus 618? Below last week's low, 92.47, for instance. And for about 56 pips only, you really have a cheap buy for a swing trade. It's nothing. A swing trade for 56 pips is a very tight stop loss, especially if you're using a weekly candle, a weekly level like this, which is a technically nice place to hide a stop loss. So to me, although I do see some intraday perspective to the downside, it's not as exciting as the upside, because the space is not as much. I do certainly hope that price gets there, because that could be a good one. Now, you never know, but it's relatively small stop loss. What would be the potential target? Well, that could be all the way at 195. In my opinion, not 195. Scratch that. 0.9520. That's 78.6 fib. That's 220 potential versus 56. Not bad. Almost 4-1. But that's just the first target. It could go to the 886 fib, which is 96.20 as well. So part TP, part trading stop could make sense to maybe optimize that R2R. In any case, close to 4-1 is already good enough, I would say. So that's the odd USD. As always, though, if you are new in here, by all means, let me know if you have a question. We have a pound New Zealand request, so let's take a look at that. Close to yesterday's high, making a resistance line here. There could be some divergence between these tops on the pound New Zealand. We got a higher high on price, but we have a higher low in the oscillator at the moment, and the oscillator is turning. So it looks like we're getting close to a confirmed divergence. I wouldn't say 100% confirmed as yet, but it's very close. We have 1, 2, 3, 4. This is the 5th candle not breaking the high. If this candle closes, then I would say it's relatively, I would say it's confirmed divergence for the moment. Doesn't mean we couldn't see one more break, by the way, to get the divergence even higher. But I would say that would be the last break before we should see some downside. Yeah, the New Zealand, looking at this pound New Zealand, it's different than the Aussie somehow. So that could mean we have to investigate this difference more, because if there's a difference between the odd and New Zealand, it could be that the odd New Zealand is going to make a correction down, because the odd New Zealand did move up a lot. And there is divergence in the odd New Zealand, I already know. I checked that beforehand. So that could happen. That could explain the difference. Maybe we should take a look at the New Zealand dollar as well in a second to see how that looks like. On this hourly, we don't have divergence though. That's why I'm still leaving space for the fact that we can get one more breakup just to get the hourly divergence, for instance. Okay, nor do we have it on the 15 officially. We have bad divergence, but not proper divergence. So it's not there quite yet for me to say we won't break this top for sure. But we're very, definitely in this situation that we might not break it. So how can we tackle that insecurity? Because we're not 100% sure whether that top will be broken. It doesn't look so, but there's still maybe a tad chance that it could happen. So, one could maybe use a stop loss that's a bit more spacious away from the top, like 30 pips above the top. So anytime, the pound were to break the top, you still have some potential there to survive the trade. That stop loss. That's one way of doing that. The other one could wait for a bit more confirmation of the turn, right? Because price is still pushing up. So what could be a confirmation of the turn? I would say is looking at the 50-minute chart. Probably we need to, I would say if we break at least this pivot, or at least have the moving averages, these short-term moving averages pointed to the downside. Now obviously if you want to take a bit riskier one, it's very close to resistance. If you use a short here with a tight stop loss here and just take a small risk, then you're just taking a bit of a risk that it still pushes through. But in all honesty, yesterday's high is a tough level. If in that regard, it could be worth the risk. But you just have to realize that I would take a bit smaller risk because of the risk that it could still maybe break the top by a bit. Although I don't think it's high. Once the moving averages are aligned here, though, like this, for instance, although that's not a good example, it's not to show that that's the start of the downside, but what I mean is that we still have maybe some support left, and waiting for that to break like this and then hook back could be a bit more secure that this is the top. But where's the daily low yesterday? Let's take a look. We're looking at the 16th of April. The daily low is here. So, that's any downside, we got space down to here for the moment. When we break yesterday's low in the L4, we could see some follow through, maybe even to the downside. Between the pivot and L4 is the main space. Something to keep an eye on. Let's take a look at the New Zealand USD. let's put a trend line like that. That trend line is valid for the New Zealand, just like the AUD USD as well. Let's see, New Zealand USD. Well, bouncing off the pivot, bouncing off the H3, so stuck in the classical ranging levels. Here too, probably just like the AUD USD, in fact, we have this line, or this one. Let's take a look if there's any clear differences here. I guess the difference is that the Aussie is already hitting the L3, the Kiwi is bounced off the pivot. So there's more bearish threat here in the AUD USD, although the AUD USD is bouncing. I'm not saying it's closer to breaking to the downside. That's, I guess, the difference. Let's take a look at the AUD New Zealand. You can see the push up here, big push up, but we are very close to this daily top. And we just hit the 886 fib. We have divergence as well between these tops on the AUD New Zealand. So in that regard, at least a retracement back to this level seems likely. So I would expect a bit more Aussie weakness indeed. Now that weakness doesn't have to go in a straight line. It could have a bounce here and then get like this. It could go up, down, like that, and that, that could be choppy. But in general, maybe that could happen. In the bigger run of things, though, the AUD New Zealand, if it breaks this top, could be making a bigger reversal trade. But we haven't broken that top yet. We haven't broken the 109.50. I'm just saying if we do, there is a decent chance that we will fill up that space there between the brown and the purple moving averages. So that's something to keep an eye on in the long term, is the bullishness of the AUD, but not probably right here, right now. If you look at the price action, what do we see on the 4-hour chart? A big wick. That could be a signal that we're having some struggle on the 4-hour, and a retracement to test this bottom therefore seems a bit more likely. So just to, that's something not to necessarily trade, but to keep an eye on and to keep in mind when looking at today's market. And if there's an AUD or New Zealand that you're looking at, if there's a particular pair and you're wondering, should I take the pound AUD or your AUD? The pound AUD or your New Zealand? The pound AUD or pound New Zealand? Then this is an equation that you can take into consideration when doing that analysis. Obviously, if trading down, then AUD would be better. If trading up, New Zealand would be better, right? Because AUD New Zealand has that downside potential for at least a bit. So what else is going on? We talked about the euro follow through, hopefully. It does look bullish, although it's close to yesterday's high. The moving averages are pointed up, and we poked through the R1 and H4, which would give us a decent probability of follow through. Let's see. Pound dollar, I'm a bit skeptical of follow through. I'm not saying we cannot make one more break higher. We certainly can potentially break this top. It's just not something I want to trade either way. As explained already earlier. AUD USD stuck in that triangle. Break the downside seems more likely, but still, let's wait for the break. Kiwi stronger than the Aussie, but also waiting for the break of this triangle. Dollar CAD, anything else going on here? Dollar CAD. Dollar CAD was funky, and that, of course, had also to do with the fact that we had the bank rate yesterday in the press conference, so that made trading the CAD difficult. And as I usually don't trade CADs actually, or any pairs during interest rates, so I didn't trade the CAD either because of that. Okay, just as a quick go-to rule, I always, or not a quick, but just as a rule, I always use that dollar Swissy, very small range, didn't get any follow through yesterday, which was for me disappointing. Despite the small range, this did look good for a break, pullback, and go, but that go didn't go anywhere. So that was about half a loss for me, unfortunately. The dollar yen, as I said yesterday, although it didn't happen yesterday, there could be that potential to fall when we get weakness, and you can see prices rounding here, boom, fall. Now it is a risky trade, as I said yesterday, because it's why? Because it takes time here, as you can see, so you need to have patience with that one. But it is funny to see it, because every time you can see, first we have a very steep trend line, then we have a less steep trend line, less steep trend line, and eventually we kind of like it's kind of like a rounding. It's just interesting to see this rounding like this, right? And then boom, fall. I would be surprised for the yen to make one more fall, by the way. Not that I'm a big fan of trading this dollar yen, but on the 50-minute chart we can see momentum to the downside, right? And you can see everything is lined up already. So one more fall towards 101.70, I would say, to the HL5 is a decent probability. So maybe you caught that break earlier today, at the beginning of this trading day. If not, then I think we could see follow through. If you're in that trade, I would just trail stop, put a trail stop behind this 50-minute fractal, which is also an hourly fractal. So it should be enough. Regarding the long term, I am neutral. I don't really have any strong opinion / analysis on that, nor any feeling for that. Not that feeling matters, but I mean, I somehow just not interested that much maybe in the dollar yen, but I can see the potential of indeed what Wei is, for instance, saying is the fact that we can go, for instance, to these lower fib targets potentially as a 61.8 at 100 or the 78.6 at around 98, 100 and therefore 198 could be the potential targets. One thing that I would like to see for that is a break of this trend line, for instance. That could be an indication that we make that fall. Before we break that trend line, it's a bit wacky. Let's see, Wei is saying ABC waves downwards, long-term 5-wave uptrend. Yeah, the question is indeed, what I'm puzzled about is, well, we have this as a clear 1, 2, 3, in my opinion, with this as a 4. So that has the classical works, but is this 5 finished? Or do we have basically still 1, 2, 3, 4 of 5? Or is this a wave 1 and 2 of 5? So in that regard, we could retrace as deeply as this high, and it could still be wave 4. We could retrace as deeply, and by not breaking, though, this magenta line, and still could be wave 2. The red line would invalidate wave 4 of wave 5. The magenta would invalidate a wave 1, 2 setup of wave 5. So therefore, we got options. Above these lines, we'd still assume that upside count. Below it, obviously, those things change, and then this is probably the completion of wave 5. until that point, we need to figure out what this is, maybe to have a bit more judgment of what could happen with that. That's a bit difficult indeed. If we zoom in, to me, the 38.2 would have been an ideal bounce for upside continuation, but we didn't do that. 50, okay, but then we really stalled a lot. So what that means is that this is a potential A. I think that's what Wei is talking about, and this is B, and this is the start of C, of which this could be either 1 or A of C, and this is the B of C, and we go down for C of C. Other scenario could be that we had this wave, correction wave is finished, whatever it is. We have a wave 1 here, although it does look very awkward at wave 1. I already looked at the internal parts of that. And then this is the wave 2, and the wave 2 is then subcomposed of A, B, C, D, E, which then should be some kind of expanding wedge, I guess. Although, let me check that, A, B, C, D, E, yeah. It just barely could, I think, technically qualify as expanding wedge. This low here, 101.20. This low here, 101.20. It's the same actually. So expanding wedge should have this bottom actually lower. It's dubious, therefore. Unless you count this as an A, B, C, D. That doesn't make sense. Well, in any case, the idea is that this could be, whatever the formation is, this could be 1. This could be a correction for 2. And then this is the bounce up for 3, but that doesn't seem that likely at the moment because this doesn't look like a real strong bounce for 3, so that probably doesn't make sense. Probably, indeed, in that regard, makes more sense indeed to see this still as a follow-through here like that. Probably more likely, I agree. The only thing that could happen, though, is that because this is very strong, we could still see a bigger bounce up to correct higher before we move down. Right? Because we stopped at the 38.2. We could find buyers somewhere here again to move up to the 50 fib. Move down, move up to the 61.8, then move down and break. It's tricky. I think it seems more bearish. I agree with you now, indeed. But the question is when and where, maybe, will we. In any case, this trend line is a good thing to keep an eye on. For the moment, though, looking at the 15, that seems a bit more clear that we could have that space down to 101.70. What would that 101.70 be? That would be pretty close to the support level again. Yeah, I think that there is potential to see it both ways. I guess we have to wait for confirmations of breaks and incorporate everything as we go along. Yeah, if anything, indeed, the trend line is a good indication. Yeah, it's true. It's true, Wei. There are definitely situations where one side seems more likely, no matter what count you have, but this is not the case with this dollar yen. It's I use it more. I use waves as a confluence more to get a feeling of what the sentiment could be, and try just to, instead of using it as a theoretical exercise, I try to keep it simple for myself and just say, okay, wave analysis is all about gluing together impulses and corrections, right? Every swing high, swing low has its impulses and its corrections. So I'm just looking at all those impulses, corrections, and gluing them together and saying, and labeling those impulses and corrections and looking for patterns, and thereby trying to understand if the next leg could be impulse or correction. So that's why I try to keep it simple for myself, and that's why I also use a lot of tools besides Wave, because it's just an estimate for me. Let's see. Oh. Pound yen. I don't like the pound yen at the moment. Oh wait, I had a question regarding pound. Sorry, MJ, I forgot about your question. Pound dollar, yes. Well, it depends how you want to trade it. I personally, if I am looking at this, I see two options. Either trail stop it, as I said, but there's even the option of exiting. And, you know, just if the price breaks through this red line, you can always try to re-enter later again, if it does continue. It does seem like a potential for a retrace. If it doesn't retrace, then if you exit here and you enter 12 pips higher, you sacrifice 12 pips basically. Not a big deal, I think. So this is the one, two. We've already had substantial. Well, let's see. 4-hour candle is still strong, but so it depends on how you see it. I mean, it's still in a bullish mode. It's still moving choppily. So that divergence doesn't have to kick in right now. It's just that I wouldn't want to buy it. There's a difference between, let's say, entering and staying in a trade. This is looking like a bull flag, so there's definitely still the chance of continuing. Also, of course, as I said, there's a difference between staying in and entering. But yeah, there's certainly the risk of some retracement. It depends on the parameters of your trade and your trading plan and rules about that. If you feel maybe more uncomfortable with, depending on where you entered, about giving back too much profit, then you could even use the 50-minute rule as a stop loss, right? We have a clear fractal here, and the H3 short, so one could go somewhere around 168.20, 168.19 maybe, or yeah, for instance. You still, you know, give the trade a chance if it does bounce. But if it breaks through these levels, then you're exiting. That's one way of potentially doing that. So you got a couple of options. You could also even have a TP right here. Once it makes one more upside, take it off at yesterday's high, for instance. And if it breaks yesterday's high, you can always re-enter. No. Or not re-enter. It doesn't have to be, by the way. So it depends. If you're taking this big swing trade, then I would just leave it as such. Actually, if you're in the swing trade, you know, you can even leave your stop loss at break even or even at the original risk, because we don't even have a 4-hour fractal to support this upside as yet. So any dip will probably find a 4-hour support and make still one more up. So it really depends on what time frame. So if you want more info on that, I would need maybe the trade details and the time frame. If I'm trading the 4-hour here, I would not take it off though here. Let's see. What else can we look at? Oddcat made one more push-up, surprisingly. It already has massive divergence, but that push-up really didn't go anywhere. It just hit the resistance moving down again. So there seems to be, I would expect some CAD strength, maybe relatively eventually, whether that's here or a bit later, we don't know. As I said, EuroCAD also had a very big divergence. We seemingly have 5 waves and seemingly potential, I would say, to make maybe a bigger correction. Let's see. Not 100% sure yet, but could happen maybe 2-3 weeks from now. At the moment, we're still retracing this downside, so wouldn't expect it soon. Euro is not breaking the top. It's threatening here the trail stop. Not too interested in this Swissie. I think it's relatively a slow market this week. If I look at the daily highs and lows, yesterday only 2 or 3 pairs had a daily high or low range higher than 100 pips. It's not many. None of them had higher than 120, which is extremely small daily candles across the board. Most had 70. Yeah, that's small. That's small. Yen is not moving a lot. Or pound yen moved a lot yesterday. But if you look at yesterday's daily high-low, we had only 5 days above the 100. One of them was pound yen. So in my opinion, it's seemingly quite slow there. Slowish market, I would say. If you look at ATRs on the euro dollar, dollar yen, quite low. If anything is trending, it seems to be the dollar yesterday, right, with the pound dollar push up. But otherwise, AUD is retracing, New Zealand is retracing, yen is caught up at, consolidation. This isn't moving much. The Swissie is wacky. Euro pound seem to be a bit neutral across the board. So dollar seems the pound dollar was the only thing really that moved a lot. And in the intermediate future, maybe beginning next week, as I said, when the AUD finishes its retracement, I would be interested in AUD strength. That hasn't happened as yet, but I'm keeping an eye on AUD strength. But I already explained the bounce off the minus 618 potential, or the break of the trend line, right? $167.90. Yeah. Well, that's a bit higher than I thought, because I was looking to buy it. I thought maybe you had a break upon this top, for instance, or in this consolidation. In that case, depends also where you have the risk, right, and what your trading plan is. But there are two options, I would say. You can move it to break even and hopefully, trail stop this because your entry is below this fractal. The other option indeed would be maybe to, let's see, today's initial low is 167.94. Yeah, that's one choice. You just put it to break even. You're under today's initial low, and you have to see if you get follow through. Or, as I said, depending on your R2R parameters, if you risk many pips on that, then you don't want to exit the trade here, because then you are basically catching a small profit for a very big risk. It's a different story if you move the trail stop loss, but you need to move it, under something that makes sense. And what is your entry time frame? If its entry time frame is, for instance, an hourly, you could move to the 30-hour chart and say, okay, I trail stop this bottom here. Go 8 pips below that, 5 pips below that. Then you're not, clicking out the trade and you're just trail stopping it. That I would say option number 2. For the moment, without knowing all the specifics. Oh, we forgot to look at the calendar actually. CPI, we have CAD, apparently German PPI was negative. Tomorrow, many holidays, right? Many day off. Monday too, by the way. So watch out for that slow market potential coming soon. Yeah, you want to use, let me see, 1 second, let me check. Two, 34.12, 2 for applied. You want to use 0 for the middle and 3 for the lower one. So 0, 2, 3 for the applied one here. Let's see. Sorry, wait. What did we? What? I forgot what I was talking about. Actually, we discussed something the other day, but I don't remember. Yeah, indeed. Yep. I'm just telling Ralph because he was wondering. So let's see. Sorry, folks, a bit distracted, but I'll be back in a second here with the screenshot. Yep, good stuff there. That's a link for MLQ4. Great. Explaining the different, the different meanings of those. So Ralph, take a look at that. You can see all the meanings, in fact. and their numbers. Great stuff there, Wei. So other than that, what else can we look at? I don't think the yen, I'm not too, let me scout through everything, but otherwise, let's take a look here. I saw a chart from the NASDAQ, in fact, today, and that had a lot of bearish momentum in it. And someone was showing the potential for a double bottom, not a double bottom, but kind of like a neck, potential head and shoulders forming. So maybe with this next upside, the right shoulder could be built on the NASDAQ, something like this, for instance. I don't remember exactly, but was looking like this. So price was right here at the moment on the NASDAQ, so they were speculating on the potential of this happening. Some upside still to get the right shoulder and then downside on the NASDAQ. And they were saying that maybe, with that downside on the NASDAQ, you could see maybe the bigger bear market on a bigger reversal or retracement on all the indices in the US, at least, maybe other parts of the world too. So personally, I wouldn't be surprised to, in that case, if that happens, we could see maybe dollar strength kick in. So who knows? That could be maybe still a couple of months upside, and then maybe dollar strength kicks in. We'll have to. I mean, that's a rough guess, obviously, but that could be something to keep an eye on. Gold. Let's take a look. Well, indeed broke this upside here, this channel. Let's take a look at which fib. Close to the 50, didn't hit it though. So gold is quite funny. Of course, after this move down, double bottom, good up channel, big break, small up channel, break again, and well, we could put a trend line like this maybe to see, okay, that's going to continue further, at least maybe for a bit. Upside doesn't look too interesting at the moment, but we can put a trend line like this to indicate the resistance. Let's see, S&P 500. Probably need a new, yes, 1 second. If you have any questions, let me know. Otherwise, we're going to try to take a look at this S&P 500. Otherwise, as we wait for this screen to pop up, I would say your dollar upside, probably one of the most interesting ones. Maybe dollar yen downside. AUD is the upward down break of the triangle, Kiwi break of the triangle. Right, so it's basically the dollar primarily at the moment, I would say still. Then other than that, maybe still keep an eye on the euro AUD, as I already mentioned. Maybe pound the Zealand downside, as we already analyzed, but that's about it, I would say, for the moment. somehow doesn't seem to be working. Not sure. Maybe this demo account was opened too long ago and doesn't work anymore. It's possible. So it doesn't seem that we can get there, but it's a pity. But I saw the Nasdaq chart today. That looked like a bouncing spot. So despite probably the divergence we have on all these indices, maybe we'll still see some smaller correctional upside still. But I don't see the chart here at the moment. Let me go to XAG. That's even looking more bearish than the gold, in fact, because if you compare those, we had a pretty strong rally here on gold. We didn't have that at all with XAG. You see the relative difference there? If we put a fib on this downside, gold went almost up to 886. And XAG, we went up to just above the 50. So you can see, relatively speaking, bigger upside there. If you look at this weekly chart, it's difficult to believe, but it almost looks bearish again. At least XAG, because if you look at this potential here, it looks almost like some kind of trend line that's connecting these stops. And if we connect the bottoms here, almost looking like a descending wedge, funny enough. Difficult to believe, but could it fall indeed? Another time, I don't know. Potential target at 13.440. Crazily low if you think about it, in a way, but if we put a fib on the last swing high and swing low on the monthly chart, it would equal the 1340, would equal the 886 fib. Kind of stopped at the 7.6, although we were shy a bit. I would say the 13 would be, if we ever get there, would be a reasonable potential for a bounce. But let's see if we get there first of all. Yeah, indeed. Wei says also flat bottom triangle silver. How would you play the spread between silver and gold as a pair? Not sure what you mean. You mean like the difference in the fact that the gold bounced more than XAG? I don't know. I never actually thought about that. It's an interesting idea. I'm not sure if there's any pair that pairs XAG and XAU actually. Yep, that could be a solution indeed. Yeah. Indeed. That would probably, yeah, that would be the way, would be a good way to do that indeed. Especially this XAG seems to be about breaking to the downside. That doesn't seem that apparent on the XAU, although we do have this support trend line as well in play. Break of that, break of that, we could see the bearishness continue. And maybe for XAU USD, we made this triangle here too. ABC correction, one more fall. Who knows? That would mean minus 272 target at 1,000 on gold, with a together with the minus 618 target. If we put a fib on XAU USD from here to here, no, there's no fib actually. 1,000 is in the middle of nowhere. It is closer to the 78.6, maybe 950. Anyhow, we'll see. We'll see. We'll talk about that when it happens. But for the moment, though, this support trend line, if that gets broken, there could be some downside potential. Well, folks, I guess that will wrap it up for today. Unless you have some questions, otherwise, I really don't see anything that is trending nicely, except those pairs that I mentioned. I think those were the more interesting ones for me. Other than that, not really. Could also be maybe quiet because of the, I don't know, because of the holidays. In any case, tomorrow, Monday, we should definitely count on some quietness. So just be aware of that when looking at the 15-minute chart. That there, don't expect. I mean, if you don't have any trades, that's normal on these days because it could really go flat. Let's see. Well, tonight we don't have any webinar because we moved the webinar to Tuesday. So we'll be back next week with the usual lineup. Monday and Wednesday evenings, Nenad will be giving a live webinar. I will be back Tuesday, Wednesday, Thursday, of course, and then Thursday we'll be back together, in fact. So those that celebrate Easter, happy Easter. For those that don't, happy weekend, of course. And see y'all soon. Cheers. Good trading.